The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Well, hi, everyone. Basil Chapman sitting in for Larry Pesavento. Well-earned break that he's taking, and I wish him just the very best with the family. I think they're expecting a newborn at some point, and they're all going to be around for that. Wonderful. So it's my pleasure to be here whenever I can. If I have an opportunity, if there is a break in my schedule, I certainly would like to be able to sit in for the show. I can't say sit in for Larry because Larry does work that is fabulous. He's written books about it. I just do the very best I can within the concept of the Chapman wave methodology. Well, let's go straight to the issue right now. And the E-minis are up 3. This is the S&P. They made a pattern that I was discussing the other day. I'll show this pattern. If you're looking at the charts, you will see that when they went to 1695.75, back on the 1695.75, was it? Why have I got 50? Well, on the 23rd of July, the MACD, I use different technical indicators. I use MACD moving average, convergence, divergence, set of moving averages. There's 26 look-back period and 12, but actually the green line is a combination where it turns out to be a 9-period differential based on those two moving averages, and it's much shorter term, of course. So the green line tells me, having deflected lower, that the S&P is struggling, that pop up there. I don't want to get too complicated. Technically, in the Chapman wave, you just look for the lowest low bar. That's the low of the 24th at 1553, and you count each successively higher peak. That's as simple as it is. But every once in a while, over the years, I found that we had gotten to a peak C, the third peak, and then all the action that transpired to the downside after that met exactly the criteria of a peak D, where you would expect there's a chance of a much greater time and price move to the downside. And yet there I was stuck waiting for D, and it never happened. The closer I got to looking at it, the more I found that if there were two parallel highs on two bars, they have to be consecutive, and the third bar broke out, especially in the futures, where in this case you're trading in not pennies but 0.25 quarters, 25 cents, that I could use something that I treat very respectfully. I don't use it arbitrarily. It's only used in certain occasions. It's used a lot in under 10-minute charts when you're trading intraday. It's fabulous the way it works that way. But in the concept of the daily, weekly, and monthly charts, I hardly ever use it. But when I do, it's judiciously. And what I've done here is I've said that this could be a phantom peak back on the 27th of June at 1614.25, and the next day was 25 cents higher at 1614.50, because in the 120-minute chart, all the criteria said that 25 cents peak that was missing, it was really just a technicality. So what I do is I keep informed about it, and I treat it as if it was a peak A, I would be at peak A. Peak B goes to on the 1st of July at 20.50. Then peak C, instead of what it should be, peak B, is at 1695.50 on the 23rd of July. And here, when you've got a candle of 1705.00 on the 2nd of August, and the next day you get the same thing, but with a doji candle, what I call a silent doji candle, then there's a greater chance that it could pull back. And if it pulls back, I've got to be aware that the technicals were failing at that high. And therefore, there could be a failure, and that gives me the heads up to say, if you were long, that's where I would be taking profits, because even if it went higher to D, it should still be coming down based on the technicals and not last very long, just spike up and then come down, number one. Number two is, if it goes sideways, that's also fine. But if it breaks down, I would have to consider breaking down, in this case, would be a close below yesterday's low of 1680.50, would say, heads up, that pattern that I call the falling axe pattern right there says that the next level of support would be 1673 to 1670. No. Yeah, let's go one step at a time. So a breakdown below 1680 says that the next level of support would be 1675 to 1672. Okay. So in the meantime, it's given me a signal, but not a sell signal. Whereas if I had to look at the YM, I haven't updated this, I'm going to get it now. Yeah, the YM, which is the Dow futures, went to a peak F. Let me explain what that is. A peak F is the sixth highest peak. And in this particular instance, you've got all the prerequisites for a down move. The down arrow came in because it was turning down. It didn't fill all the criteria. But I'm just going to be very cautious and do this. And now I'm going to put a little inverted hat. And that says, that's the signal that says, be very careful. Why? Because you see there was a failure. I'm going to put the lines in again. It's right there and right there. I'll see if I can change the color. I'll just change it to gray, just so that you can see where it goes. There are. That level right there, when the Dow went to its high, the futures went to the high on the 24th at 15,564. The MACD and the stochastic were very high. When they went to the most recent high of the August the 3rd, I think it was, August the 2nd, at 15,600, they were failing. But the fact that the Dow is not plummeted from that moment on, it pulled back. By now it should be underneath the candle of 15,343, the low of the 26, and it isn't. So far I have to consider this as a high-level consolidation. The weekly chart by tomorrow at Friday at 4 o'clock, that's going to be really important. Why? Because if there's a close underneath or close to 15,300 to 15,298, that says it's going to be a major sell-off for some reason. I don't know. That makes the weekly chart a double top, and that's got to be, you got to be respect that. Okay, I'm wrong about this being some kind of a top. If at any point the futures go above 15,600, the E-minis go above 1705, just make it, no. Yes, and then the NQ, let's do that as well. NQ is the NASDAQ futures, have made a peak. See, there's no other way. I don't have any phantom peaks or anything. So I suspect there's just enough room here to try to go to another high for leg D in the NASDAQ futures. That's the September futures, just above the doji high of 3140.25. And then we've got to be somewhat careful. Can the whole thing recycle higher? Absolutely. If the volatility index, which is trading, let me just get this right now. Let me go to this chart right here. If the volatility index remains low, and it's at 12.61 right now, theoretically, it should be up at the 1330. It should actually be making a new high above 1391. It's not. So that's showing that there's still buying coming in. But if that buying does not produce the results to the upside, you've usurped energy. Think of it as driving in sand. You put your foot down on the accelerator, the wheels spin, but you're not going anywhere. You have to have the wheel grip the tarmac and take off. And that's exactly what this buying pressure and the volatility index is telling you. Okay, now let's look at some other things. I had a couple of requests. I want to just do one thing right now. I want to look at bonds. Now, I'm going to go to the, if you don't mind, I'm going to be looking at the continuous contracts here. Why? Because I've got them in monthlies. I don't have that, don't have enough data in the futures going to, say, the September or December contracts. So the low of 132, round number low, went to a slightly lower low of 131.25 30 seconds on the 2nd of August. And now there's been a rally, but this is just a leg A to the upside. I shouldn't say just. It is a leg A to the upside. I'm calling it a gray A, meaning it's underneath the previous high. And the moment, if bonds are able to spike above 136, and the TLT has to participate as well. That would be very good action. And that would say the next level of resistance would be 136.27. And once it takes that out, I wouldn't say it's free sailing, but for the first time since it broke down in the weekly chart since May of 2013, it'll be the first time that, this is the middle chart, it's my weekly chart, that bonds have been able to close above the 9-period moving average of 135 and 30 seconds. Can it do it by tomorrow? I don't know. But by next Friday, that's going to be the test. If money goes back into bonds, that'll make the market a little bit more vulnerable. But the monthly chart has this it's really a 26-year, I think, bull market in the channel, 31-year bull market altogether. This channel is really important. Why? Because bonds, for the very first time since 2011, are coming back to what I call the inside track in my work. This is my CD introducing the Chapman Wave methodology. I talk about all these different things. I'll just quickly show you something here. You see here's a blank chart. What are the letters of my work do? How did I come about it? Very simple. See, there's nothing there. You just got the bars. It's very difficult to decipher what's going on, but all I have to do is this. And all of a sudden, you've got your peaks. This is a revolutionary concept. 20-something years ago, I started it. You never read about it, anything, unless you listen to TFNN or people that have taken my courses. And it's so simple. You go to a D, that's where you've got to be careful. You can go higher to an E and an F even. That's where you can get the biggest pullback, especially an F. And we've got an F now in the Dow. We've got a peak F in the S&P daily. We're going to be watching this real closely. So that just simply answers the question of what do the letters mean. And here you've got a peak E in the monthly chart. And all of a sudden you're starting to see lower lows, lower highs. Absolutely imperative that over the coming month, because this is Larry's show and he spends a lot of time on the bonds and a lot of time on some of the indexes, the futures that we're going to be looking at, I want to just say to you that in my work, if bonds close underneath 126 at any point in the next 2 months, that's going to be very significant. It'll be the first time that it's broken this uptrend, this up channel, what I call inside track buy zone. This is where you should get a reversal to the upside. Now, I'm just going to show you this chart for a moment. This is the VIX index, having gone to 13.91. If at any point in the next week or two, the VIX is able to climb above $14.14, I'd have to say $14.31, somewhere around there, that'll be a breakout and say that VIX is going higher and the market's going lower. If the XIV, which is the inverted ETF of the VIX, if it breaks above 29, that recycles to the upside. But if that index goes to 2650, it's at 28.19 right now, this market goes lower. So I wanted to show that. Then I want to show you what did I want to do? Oh, we'll be back. I'll show you some of the other futures. We'll go to the euro, which is in leg D, and we'll look at the dollar and other currencies and questions in the den I haven't gotten to.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi everyone, Basil Chapman sitting for Larry Pesavento, the Futures Hour. My pleasure to be here. Had a really interesting question. The question was, let me see, KJ says, Basil, for years I've anticipated gold and gold stocks would move in opposite directions. Has not happened yet. Do you think that maybe this time they will, that is, move in opposite directions with gold and the XAU up while the rest of the market is down? Hey, look at this. If I go to this chart, which I just produced for you, there's the S&P. Look at the way the chart has gone up while gold has gone down. So the question of whether, if there was a down move in the stock market, could gold go higher? I would say yes, but don't think of it as a relationship of an inverse mirror image. As if I talk about the, let me just go to this. If I show you this chart right here, that is the DOG, the ProShares Trust Short Dow 30 at the top, and at the bottom is the Dow itself, the DIA. You'll see that that's like a mirror, very much. Most of the time it's exactly like a mirror. I almost get the same letters. That should be, that's an E, missed an F there, and that one went to an F and then to a double bottom. So yeah, that's an inverse. So now let me show you this. My suspicion is that the gold stocks are so beat down that there is room for them to move higher. I don't know yet whether it's a major buy signal yet or anything like that. I'm going to give you a relationship between the dollar, the euro, etc., because it's really, we're looking at this more, not the stock market, we're looking at more as a puzzle where you want to put the pieces together. I'm waving my hands and crossing my fingers here. So the gold contract, I think, has a good chance to bounce at some point. It needs to take until gold itself takes out the high of 1349 on the continuous contract round. Whatever the high is on July of this year, it needs to take out that high. If it does that, then the 1400, it's at 1312 right now, then the 1390s to the 1440 area would be the arch formation that I suspect could unfold, and then gold comes back, I think, to retest not the lows, but near the lows, or maybe the lows. I don't know yet. Depends on how high it goes, number one. Number two, on the weekly contract, you can see I've spoken about that. Gold needs to take out the high of the 26th of July, and that would say, if it does it, and it's able to get anywhere into that ugly candle of the 21st of June at the 391.80 high, this is on the continuous contract, finally, there's a chance to go to the 1440s on the 200 period moving average. The MACD and stochastic have to move up in concert with the price. So far, it's kind of okay in the weekly. The daily is the one that says the MACD is making the best formation, with the stochastic trying to make a V-shaped reversal. That channel line that I'm looking at in the gold contract says it needs decisively to break above 1320.30 to try to get to the next candle of 1339.70. So step by step, as it was on the way down to the peak D doji top on the 23rd, that's what we're looking at. Where does it fail? If in the next week, instead of breaking above 1328, somewhere around there, it starts to just go sideways and then takes out today's low. Today's low of 1282 says, wow, be careful, because it's liable to take out the 1271 low of yesterday. That'll be very negative. I suspect it's not going to do this. One of the reasons why, for my subscribers to my opening call, we went back to long in the equivalent of the GLD, which is basically trading with the price of gold. Now, let's do something else. So that's what I wanted to say. So here's the chart that says, don't think of it as a direct relationship. Think of it as something that happens, and by coincidence, other things could be going on. After all, gold was in a bear market from the moment it made its high back in September of 2011, even though it had a cup formation that failed and they went to an arch formation. It was in its own bear market. Now it's not a fantastic move that it's made. By now, the GLD really should be up at, instead of 126.75, it should be breaking out above 130. It should be at 138 as far as I'm concerned. So it was not a climactic low in the sense that it gave a V-shaped bottom, and right now it's just soaring and breaking out like the Dow and the S&P back in March of 2009. This is just a really nice counter trend bounce. So we're done with that. Now let's go to something else. Just wanted to show you the yields. You see the yields? I'd say that I'm pretty sure we're going to make a peak C this week in the 30-year and the 20 and the 10-year. Well, we are. If there's no new high above 37.74, it's trading at 36.91. I don't see any chance right now of it doing it by tomorrow, but who knows? I'll be back. Basil Chapman sitting in for Larry Pesavento. I'll be right back. The Dow itself is up 26. S&P is up 6.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back. Basil Chapman sitting for Larry Pesavento. I had a couple of questions. Let me just finish the euro, because remember, for if you've been listening to my show, and if you listened to me yesterday when I was on Larry's show, I said I'm anticipating that there will be a leg D up above 1.33439 in the euro-dollar currency pair. And lo and behold, we powered right through today. And what I said is I wasn't sure if it was going to go to the 1.34153 high back in the, that was on the 19th of June. But if it was able to close nicely above the peak C, then there was a chance. Well, we are very close. Today's high so far is 1.33995. So we're getting there, 0.05 away. Now what I'm looking at is that turns out that in the weekly chart, there's a very good chance. Now I have to say there's a very good chance that the euro-dollar currency pair will go above the high of the week of 21st of June to start a leg D. The moment it does that, it creates this double cup pattern. I mean, it could actually be a single pattern. I'll make it a little bit clearer like that. After an almost successful pattern, the dreaded HG, I don't want to get into too many of the technicals of the Chapman wave because it's like a lesson that I'd have to give and I wouldn't be able to have enough time. There was a successful H pattern that now turns into a cup, and what that invariably says is that there's a chance now to go all the way towards the top, the left side Grand Canyon peak that was made with the sharp downward face that has to be climbed. But I don't do that. I like to do it just one step at a time and say, if the euro is going to climb very strongly, the next step would be that candle of the 22nd of February, the week of the 22nd, 3.3433. I'll go one step at a time. Since there's a chance that I might do some of Larry's other shows, we'll go one step at a time. And I'll put it into the context now in the weekly chart of the dollar. One of the reasons why I've been looking at the dollar and saying, oh, that's what I call the Groucho Marx eyebrows V-shaped top that was made at a peak F in the dollar the week of the 12th of July at 84.73. Look at the speed of the up and down moves, and that says definitely that we've got to consider the 200-period moving average. That's that yellow line right there. The 200-period moving average at 80.44. Dollar index is right now at 80.92 as a target. But, well, it turns out that 80.50 was the double bottom low of the week of the 14th and the 21st of June. So if it takes that out and closes decisively underneath, we're looking at a trading range where the whole area coming up right there becomes absolute importance, 79 to 78 for the dollar, and that kind of corresponds to what the euro would be doing if it was to retest going close towards the 1.36 to the 1.37 area of the last high. So that's that. Now, if you look at the USD JPY, and then I'm going to go get to the soft grain, to the grains, that's that H pattern that I'm talking about, very dangerous. That says very good chance that the euro, that the dollar, Japanese yen currency could very well go back to 93.7. And that's what I'm looking at. Now, let's go to something else. Question about corn. I'm going to go to the continuous contract because, why? What's CC? Cocoa. Oh, isn't that interesting? Okay. You can tell I don't do this. I don't trade the commodities. Otherwise, I'd know all this. Let's go to FC. That's the continuous contract. This is fascinating to me because there were a long time ago, I drew this in on one of the shows. I think it was a show I was doing for Larry back end of last year, maybe. I don't remember when it was. And no, it couldn't have been. It must have been afterwards. It must have been earlier this year. Well, yeah, late last year. And what I'd said is in this left side, right side price time match, if there's going to be a sharp reversal to the downside in corn, there's a chance that the low that was made of 426 and 2/8 back in the first week of June of 2012, this is a weekly chart, that could be revisited at some point. But I drew in a trend line, and I said, if this trend line is support, it won't get there. It could stop a little above, maybe at the 451 level. Well, we have just gone down to the 465.5 area. It's in leg F to the downside. It says that corn is getting closer and closer to some kind of a bounce. It has to have that bounce, because if it doesn't have that bounce, it's going right down. And it's going to test that candle on the 22nd of June of 2012 before it can even get to the one of the 1st of June. So now let's look at the daily chart. The daily chart says it's gone from, now this trades very close to the contract in terms of the price, but over a period of time, because it gets smoothed out, what happens is that the price will be completely different at some point, because it gets smoothed out. This is a continuous contract. So the dates will be 100% correct, that was the date of the high or the date of the low. But the actual price, because it gets smoothed out, will be different. Well, on the daily chart, you had this pattern, this H pattern, the arch pattern that broke down. And now we're looking at a trough E, but there's no strength whatsoever here. I'd be very careful with corn. If corn cannot break above 482, it's at 472 right now. Just so that I know we're talking apples to apples. Let me go CZ13, 459, 459 and 2/8. I don't even remember what I said before. 459, 472. Oh, there's a big difference in price. Okay. Just because I'm done with the weekly and the monthly, I'm going to look at the corn, December corn, right here. So the December corn is trading at 459 and 2/8. Yeah, there's the same thing. It's December. I've drawn the same thing in here. It says we're right close now to testing. Oh, well, that was based on a different midpoint. Yeah, this is, oh, boy, I don't know. I don't, yeah. I don't see anything yet. All I can say is the moment I see that corn is, the December corn is in the 473 area, I say, great, now there's a chance that it could go for 493. If there's no strength whatsoever, then the low bar of 460, we are already there. Oh, we've already broken it. We've already broken the 460 level of December, the week of December the 19th of 2010. I think there's a problem with corn. All I can say is I see nothing in corn that's positive. I'm not sure if you're short, you're long, or you're looking for a turnaround. I don't see the turnaround. It could happen the next day or so until it breaks in the December contract above 467, going towards 472. I just don't see anything yet. And the other question was, let's see, Jay asked soybeans at S. Let me just do this. So here's soybeans. There I see a turnaround today for the first time after the doji low, and it made in the weekly A, B, C, D. It's already done that. Let me just put that in. Why is this not all notated? This is soybeans continuous contract. Well, I don't want to even go into that. Okay. So there's C to D. And it pulled back. It did cross negative. I'm going to put the down arrow. Okay. So what I'm looking at here, what a pity. I've done this so many times, going all the way back to 2003 or even earlier. So the monthly chart has got A, B, C, D, E, F. Okay, I think that's an F. No. Don't be so quick. A, B, C, D. Starts brand new. A, B, C. I just need to check this continuous contract. 1062.5, 1062. No, then that's the C. That's D. Okay, made a peak D, making a potential arch formation. Wow, that's interesting. So the soybean continuous contract is suggesting that unless it can get, it's at 11.83 now. I don't know if that's $1.83 or $11.83. I don't trade this. I have no idea. But at 11.83, unless it can get into in the monthly chart, unless it can get to 12.41 or higher, 12.38 to 12.41 or higher over the coming weeks. Got to be careful. All it needs to do here is take out the low of May of 11.18, and it's made that H failure, and it's going to come down sharply. Yeah, all I can say is that it needs to work, and it needs to work really quickly. And if it does work, you're going to see the low that was made right now on the 120-minute chart is in leg A, B. All it needs to do is to get at 186 2/8. It needs to break into the 100. Well, if this thing can get to 1190.5 or 1191, that'll be the first decent break to the upside, because it takes out the high of the 5th of August on the 120-minute chart. You've got to go step by step. So a counter trend bounce, yes. A counter trend bounce, I would say the counter trend bounce, if it does succeed, 1204 is going to be strong resistance. That's the level you're going to have to watch really closely. Now, what's fascinating to me is that in the Dow's now up 52, the S&P's up 8. So you had that strong sell-off, might have been news-related. I don't care. Now, what I've been talking about is if that, it's going to, oh boy. It's that VIX. That VIX at $12.38 is buying pressure. I have to see the VIX in the 13s in the 14s to say the selling will continue. So all I can say is there is a chance that you're going to get this stork leg formation. It's amazing. The buying pressure just keeps on coming in, and we'll just be prepared for it in my opening call. That's the way it is. You got to have every contingency open there. What I'm also looking at here is crude oil. I think I was asked about crude oil, and I'll go to crude oil. In the crude oil, this is really interesting for me. In the continuous contract, there was a peak D top in the Chapman wave back at on the 19th of July, retested but not with a new high on the week of the 2nd of August. And now we're looking at the 9-period moving average at 100. Right now it's being tested at 102.50. And then 101.45 is the 200-period exponential moving average. That's that middle chart that you're looking at right now. If that breaks, then crude oil will be coming down. It's almost like a tax break for everyone. And what we'll be looking at is perhaps it'll help the IYT, which was acting very poorly. That's the the iShares of the transportation index. But this drop bucket formation, this double top formation in crude oil, is like the H upside down or the Y backwards. That says if you pull back 1/3 to a half of the cup, be careful because you can test the low. If you close under the low, in this case it'll be on the continuous contract 102.67, you could have a 1-to-1 to the downside. That would project that the crude oil could pull back. Wow, I go one step at a time. I would say that the 101 to 99 area will be absolutely critical. But if that breaks, 97.48 is the 200-period exponential moving average support. Wouldn't that be interesting? Let's look at the IYT. So the IYT, it's not doing anything. It's made a peak F-top, also made that double top, but it went to a higher high at 119.45. That's not doing very much today. So, and it's in leg E, possibly peak E this week. I got to watch this real closely. And a doji candle in the monthly. Yeah, we're looking at things. This is a very bifurcated market. There's some stuff. Look at a GMC. I'll go to coffee just now if I can. But look at GMC. GMCR, that is. Green Mountain Roasters, coffee roasters, distributes coffees, teas, single cups. It made a peak D in the chap wave and a left side, right side price time match in the daily, and the weekly was a peak D, and it never broke that. And what I'd said was, I had a caller the other day, I said, yeah, it's looking okay right now. There's a chance it's going to retest close to the top, but I'd be very careful because this double cup formation very often is like the inverted H that goes to an M that's successful because it can then turn around, and if it breaks the low, in this case it would have to break 67.51. That's very negative. But look what happens. It gaps down on earnings news. It closed at 82.50. It had an 82.51 high on the 6th. On the 7th, it makes a red candle touching the 9-period moving average in the black line and the 9-period exponential moving average. And then what happens is today must have been the news. It comes out, it gaps down, or last night must have been the news. It goes all the way to 72.49. And now it's bouncing back, and that 9-period moving average that was support is the resistance. So what I'm looking at here is that there are fund managers that are buying the same things over and over. For instance, I had spoken in my show earlier about AZO, a stock that we just missed by a point or so, shorting today at 400, and I wanted to short it at 438 something. The high was 437.11. Went down to 424. It's trading at 428 right now. So fund managers who've been in very successful things, even now somebody's been buying it from the low and pushed it up, now starting to fail again. So it's very hard to get out of the habit of going to your source of good income because it was so successful over the years. And that's what's happening to a number of these stocks, even though their charts are starting to say, we're about to pull back. So, question of the den about the home builders, the ITB. I'll be back straight after this break. Basil Chapman singing for Larry Pesavento. S&P's up 7.5. Dow's up 51.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. Basil Chapman sitting for Larry Pesavento. Don't forget, coming right up, Daryl Martin and Diagnostic Trading Hour. Boy, that is diagnostic system work. Fabulous. Just a fabulous show. Stay tuned all day. Just great shows. You've got Andy Hecht coming on as well. You've got Dave White. You've got, I'll be back at 4 o'clock to 5 o'clock to do Tom O'Brien show. Then Andy will be back on 5 o'clock till 6 o'clock. I'm looking at the IWM here with a peak F top. That's the Russell 2000 in the daily, a leg E in the weekly. No sign yet of a turnaround in the weekly. But the daily says if the IWM, which is failing to respond now to the positive action in the market, if the IWM takes out the low of 103.47 from yesterday, good chance it's going to test the 103 round number low of the 29th of July. That's going to be key. Could even make a little head and shoulders pattern. Yes, I'm watching it real closely. Then I had a question about the home builders, the ITB. Well, I'm going to look at the ITB, and I'm going to say that the monthly chart has made a peak E-top. Where did it go to? It's just, I'm always amazed at this. There's a 200-period exponential moving average. When the ITB, the iShares U.S. Home Construction ETF, broke down in June of 2007 from 37.46 to 31.15, it went under the 9-period exponential moving average, but it also broke the 200-period exponential moving average, that yellow line right there, that Goldie line. Well, Goldilocks comes right back, and what does it do? That's the test. It kisses it right here, goes a tad, just a fraction higher in leg E, and now it's digesting the gains. My suspicion is that at 21.65, it'll pull back maybe towards the 20.50 to 19.30 area, somewhere around there. It could go a little lower, and then it'll come right back later on in the year to try to test the 25-31 200-period exponential moving average. Short term, the weekly chart's not looking very good, and the daily chart has made the arch pattern, which is testing the left side. If it closes under 21.15 in the next couple of days, not good. I'd rather have you look at the chart, this chart here, which has the iShares Global Timber and Forestry ETF holding quite nicely, making a potential peak A, but it's got that H pattern we've got to be wary of after a peak D at the top. But it is the Philadelphia housing sector index, the HGX. That's what's made a peak F top. Make that. You see this pattern here? Same as we're looking at in the IWM. So I'm watching this real closely, because if that HGX goes under 168.79, trading at 173.28, that's just 4 points lower. That's going to be a big negative. It's going to say it has to fill some of the space right there into the 160 to the 150s. So now I didn't go. Did I do crude oil? Yes, I think I did do crude. I did the continuous contract for crude. And what I'd said is crude oil has made a double top. If it takes out the low of, it just took out the low of 102.67. That in essence could give you a 1-to-1 to the downside. If crude oil breaks 101, if it closes under 102, it's at 102.63, there's a really good chance that it's going to go towards the 100 to 98 area. But 97.48 is the 200-period exponential moving average key support. So one step at a time. It has to break above 105 to change this pattern. At this point, it is a negative pattern. It's an inverted H, lowercase h pattern. It's the, I've typed it in here, inverted H pattern, or the Y backwards. It's a lowercase y backwards. Call it the Chapman wave drop bucket formation. So that in fact should help the IYT, but it's not. The transportation index at this point is not helping, but it certainly is a tax break for us if it does go down. Of course, they're very slow to change the prices at the pump, very quick to change them when they go up. So thank you for being here. Basil Chapman sitting in for Larry Pesavento. I will be back this afternoon at 4 o'clock to 5, sitting in for Tom O'Brien. Thanks for being here.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.